Nilesh Shah, MD and CEO of Envision Capital, joins us in the studio. Nilesh, good morning and happy Diwali.
Happy Diwali to you and all your viewers, and wish everyone has a great year ahead.
So Nilesh has come clad for the Dhanteras celebrations, as he usually does, of course. I think you're on a fast or
tomorrow and day after.
Tomorrow and day after.
Yes.
Wow.
That's right.
So he's completely prepared for Diwali, Pradeep. Unfortunately, you and me are not.
Well, how is your portfolio prepared for Diwali and New Samvat though? That's what I think viewers will be interested in.
Well, we are long-term investors, so we honestly don't kind of prepare for Diwali. But
So
I think, but I think the way we see things going forward is that I think it's imperative for earnings to really start catching up over the next year or so. Honestly, it's going to be a very, very important year. And honestly, if you really look at it over the next 12 months, issues like GST or demonetization, should not necessarily be the alibis for earnings to not catch up. What we believe is that, yes, obviously the next year is going to be very, very important. It's going to be the year of earnings. We strongly believe that, the worst is going to be behind for the economy. All the challenges to do with demonetization or GST would have got ironed out. Corporate India is going to be on a low base, so to that extent, performance will be required over a lower base, and I think that's something which is likely to happen. We are in that camp where we see that the next 4 quarters would be 4 quarters of very, very strong growth for corporate India and the Indian economy.
That's heartening to hear, quite frankly, and we indeed hope that happens. Well, the RBI, if was any indication, growth could likely come back in quarter 3 and quarter 4 as well, and this quarter could well be different from quarter 1 as well. Quarter 1 was a washout, maybe quarter 2 could be a decent one. But Nilesh, hold on to that thought. We are perilously close to market open. Just before we do that, I think need to get in the top trading call from our technical experts before we thank them. Gaurav, if you had to bet on one stock for the morning today, which one would that be? Okay, I think we've just missed out on Gaurav, but Hadrian is still there. Hadrian, if you had to bet on one stock for this morning, which one would that be?
Yeah, I'll stick with Tata Motors, the heavyweight. The stock has shown very strong momentum, and actually there is a dual breakout that is happening on the stock simultaneously on the daily as well as the weekly charts. So there's an inverse head and shoulder pattern breakout on the daily as well as a channel pattern breakout on the weekly. So I think Tata Motors is one stock that you can bet on for a short-term conservative target of close to 450 to 460 levels, and keep a strict stop loss close to 443 odd levels.
Okay, so Tata Motors is the stock to watch out for. Thanks, Hadrian, for joining us this morning. Thanks, Mr. Chokalingam, as well. And I wish you both happy Diwali. Well, Dheeraj, we are inching closer to the open. I think a drop of 30 odd points is what SGX has hinted.
Yeah, we'll probably start on a somber note. Maybe not too much of activity in the large caps, but the mid caps and the small caps will be the interesting ones today. Lots of result reactions, particularly mid cap IT. I keep on repeating this. Do watch out for those set of stocks. Those could be interesting ones in the session today, as also over the medium term. We'll actually talk to Nilesh Shah about that. He's got a keen eye out on that pocket for sure. And then the likes of Delta Corp and a few others could well be reacting to their numbers too. But here are the first trades this Tuesday morning, this Dhanteras morning. We'll start off on a flattish note. So, yeah, no changes whatsoever from yesterday's session. It's absolutely flat for all the 3 key indices, the Nifty, the Bank Nifty, as well as the Sensex. Just no movement. I haven't seen this kind of an open in a really long time. It's as flat can be. Bring up the broader end of the markets and let's see if the mid caps and the small caps are reacting. Well, considering how volatile they usually are, it's a very, very flat start for all the key indices. Well, pull up the Nifty heat map. There'll probably be an even Stevens on the reds and the green. Yeah, almost even Stevens. Don't quite look at the reds because the top gainer is Bharti yet again, but not up over 0.5%, yeah, 0.6%. And the top loser is Wipro ahead of the numbers today, but about 1.5%. Bajaj Finance continues to drag a bit, but that's about it. So it's even Stevens on an absolutely flat morning for the markets. Ahead of the numbers, maybe just pull up 2 or 3 stocks. People need to keep an eye out for these. So Axis Bank ahead of the numbers today may come out post-market hours, but do watch out for this one. Lying flat, dormant though. Bajaj Auto could be an interesting one. For the first quarter, if you will, after 4 or 5, wherein the sales growth numbers have been impressive. Let's wait and watch if this one does react ahead of the numbers. And ACC and Wipro lying flat too. What about some of the mid caps and the small caps? Let's see some result reactions at the broader end of the spectrum, because there would be some stocks out there that could be reacting. Earnings reactions for Oberoi Realty, the numbers were actually ahead of estimates, but 2.5% down. Delta Corp, again, numbers slightly better than estimates, but hardly any reaction there, just about 0.5%. So no, not too much of a reaction for a DCB, Oberoi or Delta. Maybe mid-cap IT has a different flavor. Persistent Systems, good numbers, 2.5%. Sascan, extremely strong EBITDA jump, and that one is of about 6.5%, 564 and counting. So good going for Sascan Communication Technologies in today's session. Some brokerage notes, Goldman Sachs sees about a 29% upside in Emphasis. That one has started off about 1.5% higher. So good going for that one. And there was, I think, Motilal Oswal on Prime Focus. Yes, wow, look at that move. 46% upside is what they see, but Prime Focus is up a whopping 20% in the session today. Clearly, from amongst the mid-cap names, this one is the stock of the morning. Pradeep, anything that beats Prime Focus?
Prime Focus, actually, volumes have already crossed the 5 days average, so that is another interesting bit of information. JP Power has moved up by 10% on the news of five big bidders interested in this stock. And also you have JP Associates moving on the back of the same news, up 3% now with strong volumes. Well, DCB may not have reacted to the good numbers, but Federal Bank keeps moving up with good volumes this morning. In fact, volumes have again crossed the 5 days average. So maybe there's a big buyer at this counter active in the morning trade. Federal Bank up just 1%, but look at the volume. Tata Tele is up 5% now because the circuit filter has been brought down. Jan Irrigation is up 2%. That's another stock in news. Make Money Organics, again with good volumes. Aries Agro, another stock we have been tracking, up 13% now with excellent volumes, so to say. And so, well, these are some of the stocks which have moved up and with excellent volumes in today's trade. So focus definitely on mid-cap and small-cap.
Nilesh, there is one very interesting thing that we've noticed the last 20 days. We may talk about heady levels, etc. But a brokerage note on a mid-cap or a small-cap stock, a bulk deal by some of the interesting names, and by interesting, I mean names which are evoking reactions these days. The reactions on mid-caps and small-caps are strong and they are lasting. There seems to be real strong interest to the small-cap and the mid-cap end of the market currently. Dangerous, or you think par for the course?
Well, as long as there is merit in each individual idea, that's fine.
Yeah.
But I think we're seeing this kind of phenomena spread to a larger universe of a lot of the, and especially on the small cap side, I think somewhere the mid cap seems to have been a bit sideways and sluggish for the last 2 or 3 months, and that's getting reflected in, say, the mid cap index, whereas the small cap index continues to make kind of new highs. And I think it's symptomatic of the bull market that we are in. It's a bull market fueled by liquidity. There's a lot of participation by domestic players. Any specific name of a brokerage or an investor which gets attached to a stock, and there's a leap of faith which the broader investment community takes on that, and you see really liquidity chasing that name.
Yeah.
And you know, on an overnight basis, some of these stocks go up 20, 30, 40%. The challenge is that in this environment, most people are really focused on a target price, really, rather than saying what's the underlying value. And I think, yes, as long as the music is on, you know, this will continue. It's only when the music stops will we see the other side of the mid cap and the small cap. When liquidity gets sucked out, you know what really happens, or when there's lack of buying, then really what happens. But so, this is what it is.
From this Diwali to next Diwali, do you see the kind of events that may actually you know, constrain this amount of liquidity which is flowing around?
Well, what is likely to happen over the next 12 months or so is, I don't think we should bet on global liquidity at all. Okay, I think global liquidity, we've seen really over the last month or two, global liquidity gradually withdrawing itself. So virtually on most days, we're seeing the FIs being net sellers. What is going to happen over the next 2 or 3 months is basically the Fed is going to again hike rates. The balance sheet adjustment of the US Fed is going to start trickling in. So I think my sense is that over the next 12 months, we should really not expect global liquidity.
But we are driven more by domestic liquidity.
Exactly. So what's really happened is over the last couple of months, it's domestic liquidity which has really taken center stage. And that's something which we believe will sustain. So we still continue to bet a lot on domestic liquidity. However, having said that, I think the big event for the next 4 quarters is going to really be earnings momentum. What we clearly see is basically the economy doing a lot better. we are a lot more positive on the investment cycle. We are a lot more positive on some of the sluggish activity in housing, for example, which is there right now. We believe that's something which will start gathering momentum in a quarter or two. The positives of GST will start playing out again in a quarter or two. So to us, the next Samvat is all going to be about earnings acceleration. It's going to be about sustenance of the domestic liquidity, and it's going to be where global liquidity could be the big risk over the next Samvat.
Well, that's interesting. This morning we had a chat, the editorial chat that we had done today, also referred in brief bit to Mumbai real estate and how these stocks are on a bit of a tear with all that's happening. But a couple of pockets that I want to talk to you about, Nilesh. For the longest time that I've known you, you have identified the right apples in IT. You stuck with some of the interesting names out there too. This quarter seems to be showing a bit of a turn for mid-cap IT in terms of at least the delivery that they've done in the quarter. Is it too early to judge whether mid-cap IT can really turn the table? Because valuations are in your favor.
Yes.
They needed the earnings delivery.
Yes.
Do you think that will happen?
Totally. We are in that camp where you're going to see earnings growth to be kind of, in double digits in the IT pack overall. Okay. And that's stemming in from what the companies are saying, a lot of the adjustment process that they have done. So if you really look at this quarter, okay, TCS basically said we are preparing ourselves for a double-digit growth. Okay, if you look at some of the tier 2 IT companies, you're clearly seeing them exercise some levers. So earlier on, the levers used to be about upping the utilization rate and things of that kind. This time around, you're also seeing them rationalizing on their selling and marketing expenses. Okay, you're seeing them let go of the underperformers within their overall team. Okay, so you're clearly seeing that Q1 is when Q4 of last financial year, Q1 of this financial year is when basically margins have bottomed out. Okay. This Q2 we are seeing, especially in some of the mid-cap names, you're seeing an uptick in margins.
Yes.
And if you listen to the earnings calls of some of these companies, there are only one or two companies which have come out with these numbers, they are extremely optimistic on margin recovery over the next 2 quarters.
Interesting.
Okay. So I think that is very, very interesting. As we step into the next financial year, we clearly think that the revenue growth is going to be in low double digits. That will further bring about a margin uptake. So overall, what we think is that come next financial year onwards, we are very sanguine and we believe that the earnings growth in mid-cap IT is going to be in double digit. It's something we've not seen for the last 2 or 3 years, but it's something which will start shaping up, number one. Number two, valuations are at a 50% discount.
Right.
To the broader mid-cap index, the valuations of IT companies. 3, a lot of companies in the IT pack are putting cash to work by doing aggressive buybacks, okay, which I think is very, very positive. It reminds you about corporate America, which 3-4 years back went on an aggressive buyback spree. And you're basically seeing now the impact of all of that in terms of their market capitalization and uptick in stock prices. And we think that the mid-cap IT or the IT pack in general is at the cusp of such a phenomena over the next 4 to 6 quarters.
Wow, that's the most bullish argument that I've heard on IT, but when Nilesh Shah speaks about it, you stand up and listen. Do watch our mid-cap IT. I think a conversation that you can't afford to miss today would be persistent systems. At 9:50, Anand Deshpande would be joining into, so do stay tuned for that. The other quick pocket, one quick question from my end, is the commentary that happened with Rajiv Jain yesterday. He spoke to us post his results, and while I know the market may be slightly disappointed because of the higher OPEX and therefore the corresponding fall in profits, but Rajiv said that they are going to do this for the next 2 or 3 or 4 quarters and then it will stabilize. But he said that compared to Q1, where we were guided for 25% PAT growth, we are upping our profit guidance, and we believe that consumption is looking very robust for our growth numbers to be better in the quarters to come ahead. Now, Bajaj Finance is an exception to the rule maybe, but can the others follow suit, and therefore would the NBFC, consumption-based NBFC's growth, would it stay for the next few quarters?
Well, it looks like. I don't think growth is going to be a challenge for them. I think for the entire NBFC pack, especially for those companies or those NBFCs which are focused on consumer financing, I don't think growth is going to be a challenge for them if you're talking of growth rates of 20-25%, which could be growth in terms of the AUM growth or the disbursement growth and all of that. I think that's quite possible. The challenge is going to be really in terms of the profitability. There could be challenges in terms of trying to preserve margins because competitive intensity is going up. So if you really look at that pack, For example, now HDFC Bank has a dedicated NBFC, HDB Financial Services, which is focusing on that. Now, look at the cost of capital of somebody like HDFC Bank. Look at their cost of capital, look at their size, look at their access to technology, look at their execution prowess, look at the reach. Okay, all 5 ingredients that you would look for a business plan to succeed are there with your competitor. Okay, so one needs to keep that aspect in mind, that it's quite possible that you could see yet loan growth happen at that pace, but there would be some kind of impact in terms of margins, and therefore it may not necessarily translate entirely to profitability. But you have to keep in mind again for NBFCs is that they're trading at fantastic valuations, so they go ahead and raise capital at those valuations, yeah, which in turn adds to the PAT growth, because there is no interest cost which you pay on it.
True.
So the real measure will have to be A, the credit cost, and B is the ROE. Can you sustain that ROE? Because when you're raising capital at this kind of valuations, it adds to your net worth, and can you kind of generate similar return ratios? So that, I think, is going to be a key parameter or a key variable to watch out for.
You know, after Bharat Financial's deal, the other microfinance stocks have also started to move up. What's your view? Do these companies really have a sustainable business model, or will they all be looking for suitors going forward, and that is really the play?
Oh, absolutely. I think microfinance companies, honestly, on a standalone basis, have no business model. Okay, I think it's a very vulnerable business model to have. So if you really look at it one by one, every MFI or the leading MFIs have converted themselves to a bank. Okay, so that is one. If you look at, say, the top 5, okay, 2 have got acquired. Bharat Financial this year, and same time last year, Gram Vidyal got acquired by, IDFC Bank. Okay, so these are the 2 things which got acquired, and then Ujjivan, Equitas, Bandhan, etc. All of them have converted themselves to a small finance bank or a full-fledged universal bank. So clearly, I think the writing on the wall is clearly there, that there is really no sustainable standalone business model for a MFI. And it's important that they become part of an overall platform like a bank.
But small finance bank is a model that will sustain.
Well, it is to be tested. Honestly, it's still early days. The challenges of setting up a bank and making it profitable are there. There are costs of compliances and all of that, and then there are certain kind of requirements that you have to make, the statutory requirements, which could in a way depress ROE. So one has to see. I mean, yes, is there a case for a bank, for a small finance bank? Yes, the answer is yes. But one has to clearly see how good the execution is going to be over the next couple of years or so. But it's better to be an SFB than to be a standalone microfinance. On a relative basis, I think there is a case for a small finance bank.
Okay, by the way, JP Power and some others are up in the green today. Jain Irrigation, Indian Hotels, BEML, amongst the other stocks that are doing well. Nilesh Shah, before we thank you, quick thought, not getting into specific stocks, but if you were to bet on one theme from this somewhat to next somewhat, would it be capex intensive plays? Would it be IT, as you sounded, or something else?
Well, IT is something which of course is there, but it's not necessarily, it may not be completely big bang. Yes, it will do well. But this whole pack, I mean, our premise rests that the economy is going to do better, core sectors are going to do better. So I think three opportunities that we look at. One is basically, a quality real estate play, a company which is probably into home development or property development. I think RERA is basically positive for the large organized players. So I think that's one important theme. It's still a sector which is kind of looked upon with a lot of suspicion, and I think that's where the opportunity is. Number one. Number two is, again, cement. Tier 2 cement stocks have corrected. Okay, and we believe that a lot of the pressures that they have been facing with GST, increase in raw material prices, etc., I think all that will get kind of evened out once the demand starts picking up. So that's second area. Third is, because we are positive on core sectors picking up, a lot of companies which are into the fast-moving industrial consumables, companies which make abrasives, refractories, etc., that's a pack that we like. So these are the 3 kind of ways to really play the resurgence in the Indian economy over the next 4 quarters or so.
Well, let's hope it comes about to be true and in a better form than what we are envisaging right now. But Nilesh, thanks so much for joining us today on the Dhanteras Day and giving us your thoughts. Wish you and your team a great Diwali.
Thank you. Thank you, Neeraj. Thank you, Pradeep, and all the viewers of Bloomberg Quint.